Today we're diving straight into the latest market data from May 2026. If you've been thinking about listing your home, or if you're currently on the market and wondering why things feel a little bit different right now, this episode is for you. Stay tuned. Thanks for watching. I'm Shirley with Shirley's Real Estate Group at John L. Scott. I've been helping clients across the Puget Sound for over 27 years, and this is the show where we talk real. Buying and selling real estate, that is. In my last video, we talked about mortgage rates and what they could look like over the next few quarters. But rates are only one part of the conversation. Today we're shifting gears to pricing and why pricing your home for today's market matters more than ever. So let's jump right in. In this market, pricing is very important. And I don't say that to scare sellers. I say it because the market has changed. A few years ago, sellers could sometimes push the price a little high and still get multiple offers. This is not the same market we're in today. Today, buyers are looking closely at their payments, the condition of the home, the location, and how the price compares to other homes nearby. So if a home is priced too high, a lot of buyers won't even schedule a showing. They may like the photos, they may like the neighborhood, but if the price feels too far off, they move on. And once a home sits on the market for too long, buyers start wondering what's wrong with it, why it hasn't sold, do we have room to negotiate? Now this slide is really interesting. According to Realtor.com, over 80% of sellers believe they'll get their asking price or more when they sell. That tells us seller confidence is pretty high. And I understand why. A lot of sellers remember what happened just a few years ago. Homes were selling fast, buyers were competing, some homes were getting multiple offers, and in some cases, buyers were paying well over asking price. So it makes sense that sellers still have that in the back of their mind, but here's the important part. The market buyers are shopping in today is not the same market sellers remember from 2021 and 2022. Buyers today have higher monthly payments. They have more information, and in many areas, they have more choices than they've had for a few years. This chart really shows the shift. In 2021 and 2022, fewer homes were selling below asking because the market was moving so fast. That was the market where the sellers had the upper hand. But look where we were at in 2025. 62% of homes sold for less than the list price. Now that doesn't mean the market is crashing, and that's important. It simply means buyers are negotiating again. It means price matters again. When a home is priced too high, the market usually responds pretty quickly. You may see fewer showings, you may not get any offers, and at that point you really have two choices. Stay where you're at and wait for the market to catch up, or adjust the price to match the market. The longer a home sets, the more leverage a buyer feels they have. That's why we don't want to chase the market. We want to meet the market where it's at. This quote from Har says it well. The listing price is one of the first details potential buyers notice when browsing properties. A well-priced home can generate more interest and increase showings. On the other hand, a home that is priced too high compared to similar properties in the area may struggle to attract buyers and remain on the market longer. So a quick question for you to think about. If foreclosure activity is ticking up in the news, does that mean home prices are about to drop? That's exactly what we're going to break down in the next video. If you're curious about what is sold, what's actually sold down the street in your neighborhood, click on the link in the description for a detailed market report, including real-time local insights. As always, thank you for watching. Don't forget to like and subscribe. Until next time, keep dreaming big and aiming high.